In today's video, we are going to be covering a trade recap on Euro USD from last week that made me 2%. How's it going, guys? Welcome back to another Spectre video. In today's video, we're going over a trade breakdown. So this is a new series we're going to be starting where we recap trades from last week and we recap trades that we have shared outlooks for in the community and trades that we have personally executed and taken ourselves. So a lot of you in the comments have been requesting that we share our top-down approach rather than just sharing concepts, which is completely fine. So that's what we're going to be doing today. So let's get straight into it, right? So here we are on the daily chart on Euro USD, and you can see we are currently in a bullish order flow. Price is respecting these down candles and then trading higher. Now, if you do not understand order flow, I do have a video on that, so please go and watch that, and this will make a lot of sense. So as you can see, this is a naked chart currently, so there's not much going on. You can see we are currently trading inside of this fair value gap, and we have all of these daily highs as an objective for buy side liquidity, and we have swing failures, right? These highs are failing to take each other out. Now let's put some lipstick on the chart. Okay, so here we are, and now we have the charts annotated, right? You can see this is a lot more clearer now. So we have traded into this order block, we've traded higher, and now we have this new series of down candles, right? Price is hovering just above it, and we also have that fair value gap overlapping, right? So this is a high probability fair value gap. We also do have a video on high probability FVGs, and this is one of the criterias, right? When we have overlapping PD arrays, this makes the fair value gap much stronger. Now, paying attention to premium and discount, you can see we are in the premium of the range, hovering just above range equilibrium, right? So it is very likely price will trade lower to take out this previous day's low, and then we should trade higher towards our draw on liquidity. Now let's move on to the 4-hour time frame, and we'll wait for price to return into this daily range equilibrium. Okay, so here we are in the 4-hour time frame. So this current low is actually that daily range equilibrium. You will see that in a minute. So as you can see on the 4-hour, we have a lot of low resistance liquidity to the upside. These highs are failing to take each other out, and this is a potential AMD, right? We're viewing all of this as a large accumulation, this run lower as the manipulation, and this is the distribution that we will be trading inside of. So if I put some lipstick on the chart, you can see this gray line here is that daily range equilibrium, or them down candles. We run lower, sweeping this H4 previous candles low, and this will be our target, right? This will be our draw on liquidity, the low hanging fruit, the most obvious draw on liquidity being buy side liquidity, right? We don't need to hold our trades all the way up to these highs. This is just a confluence that the market should run higher. Or alternatively, you can partial at this high and then leave runners to these highs up here. Okay, so now that you understand that we have traded into the daily down candles and price has currently swept the previous candles low, this 4-hour candle low, this is the 4-hour candle we want to be trading inside of. Okay, now again, you might be thinking this is just one candle, this looks really silly, but when I show you guys the next charts, being the 5-minute chart and the 1-minute chart, this becomes a lot more clearer and a lot more obvious. So here we are, this is the 5-minute chart, and as you can see, you may be beginning to spot this potential market maker buy model. Again, it's not the clearest on the 5-minute time frame, but that will be fine, we'll clear that up in a minute. So this is the original consolidation. You can see your price is accumulating before distributing lower, and then we run this sell side liquidity. Now if we annotate the chart, you can see this sell side liquidity is that 4-hour low, right? Alternatively, what can we see? This is a market maker sell model turning into a market maker buy model, right? This is the original consolidation of the market maker sell model. Here is our smart money reversal, our lower risk sell, our first distribution, and this will be our silver bullet, right? That second distribution to the original consolidation lows. Okay, so once we have that 4-hour low swept on the 5-minute time frame, you can see we get our change in state of delivery, right? So following the 4-hour sweep, price engulfs this last down candle with displacement, right? This isn't a weak push higher, this is quite a convincing push higher, creating our order block. So once price returns into this order block, we can look for our entries to trade towards that 5-minute original consolidation, which will be a lot more clearer on the 1-minute, right? So let's go and have a look at that. Now, this is the final chart in our top-down approach, and this is the 1 minute time frame. Now, if you're not an experienced trader, I don't recommend you use the 1 minute time frame. Me, myself, I don't tend to use the 1 minute time frame often. This was just a quick scalping opportunity, right? So here we are on the 1 minute time frame. You can see we had a run on sell stops, initiating our buy program to begin, and we displace higher, right? If you see that 5 minute draw on liquidity that we showed previously on the M5 chart, is a very clear M1 market maker buy model original consolidation, right? Then we have that run lower, and we have another accumulation, and then that final run lower on the sell side of the curve. So once the order pairing begins and we displace higher, you can see price returns into that M5 order block, and then we trade higher once again. Okay, so from here, this was my entry on this order block. I think I got filled inside of this blue candle a bit late, unfortunately, due to broker spreads, but that was my entry, right? So we got filled somewhere in this blue candle, and you can see the draw on liquidity is this original consolidation here. Now, if you did miss this entry, that is completely fine. There were two more very clean, obvious opportunities, right? So this I would class as the low risk buy. I would class this as the smart money reversal, trade higher. Then we have the low risk buy, trade higher. This would be our first stage distribution. And then we have one more leg higher, giving us that silver bullet entry, right? That second stage distribution towards the original consolidation. So as you can see, we have framed a very simple move from the daily chart to the 4 hour to the M5 and then the M1. And you can see in each chart example, I have never held price to external far objectives, right? We have always gone for low hanging fruit, the most obvious draw on liquidity. We never need a massive move to make profit. All you need is 2 to 3R, and that is more than sustainable, right? These are the simple, quick moves that you need to find. These are very textbook, and they will compound your account rapidly. Okay, so finally, this does bring us to the last slide of the video. So here you can see the actual position tool we used and proof of execution on the right. Now I have included the proof of execution just to show you guys these are trades we actually take, right? The trades we share aren't cherry picked. These are trades we actively execute on, and the ones we share in our community, right? You can find our community down below in the description. So you can see our stop loss was in a nice safe place beneath the smart money reversal low. Alternatively, this is also an intermediate term low, because if we look to the left, we have a short term low, and if we look to the right, this one or even this one, we have short term lows again, validating this as an intermediate term low. And we also do have a video on advanced market structure. Okay, so you can see we had that unemployment claims push as well, that red folder news that ran straight to the original consolidation. So guys, this does bring it to the end of the video. Thank you guys for watching. If there is anything that can be improved, please let us know down below, and we will make sure to include that in the next videos of this series. If you did enjoy this series, also please let us know. If you didn't really like it, feel free to let us know as well, and we will see what we can improve on. Thank you guys for watching, and I will catch you in the next video.